Hello and welcome back to the Basic Accounting series. Today's topic is the most basic yet the most important aspect of accounting. Everything you do in accounts, all the journal entries that you pass, you post them to the ledger accounts, the T accounts, and prepare the balance sheet. Everything is to ensure that the accounting equation holds good. Now, what is this accounting equation? Accounting equation says things that a business owns is equal to the things that a business owes. Now, before we understand this equation, we must understand that for accounting purposes, the owners of the business and the business are considered as two separate legal entities. So, for example purposes, we've been taking the same examples for all our videos for simplicity purposes. Let's say I own a coaching classes business. So, this business owns certain assets like this whiteboard or this classroom or some furniture, chairs and tables for the students, the projector. So, all of this belongs to the business and not me. And I am the owner of the business. So the business is a separate legal entity and I am a separate legal entity. So when I start my business, I let's say lent 10,000 rupees to my business. I started business with 10,000 rupees cash. It means I lent this 10,000 to my business. So for the business, this cash is an asset. But at the same time, the business should recognize the 10,000 rupees that it owes to me, the owner. And this is represented by equity. So we understood that the business owners or the shareholders and the business are two separate legal entities. Now let's quickly understand things that a business owns. So as I said, the furniture, the plant and machinery, the whiteboard, the property, all of this is owned by the business. Now these things represents the things which will give some sort of benefit to the business. The business will receive some kind of benefit from these. Let's quickly take examples. Cash. Cash will definitely give. I can purchase things for my business using this cash. Inventory, when they are sold, the business will receive cash. Accounts receivables or debtors. These are the people who will pay money to the business, so business will receive something. PPE, that is property, plant and equipment. Plant and machinery, property or equipments, these will give some sort of business. They are used for the purpose of business and the business will earn money out of it. Goodwill again will command some amount of money to the business. So things that a business owns represents those things from which the business receives, gets some kind of benefit. Things that a business owes. Now this part is represented by two things, liabilities and equity. Now equity, I just explained, the owners of the business represented by equity, share capital or the money with which I started the business. And if the business makes any profit, it belongs to me as the owner of the business because I took the risk and invested in the business. So the profit which is kept aside as reserves also belongs to me and I am represented in the business as equity. What are others? Others are liabilities, accounts payable. Those are my creditors to whom the business has to pay. So these things are the things which will take away something from the business. When I take out money, this equity is represented by me, so I can take that money from the business. Accounts payable or creditors, we have to pay them, so the money will go out of the business. Wages and salaries payable, my employees, I have to pay them, the money goes out of the business. So the left side represents some kind of monetary value or some kind of economic benefit the business will receive. This represents some kind of monetary value or economic benefit that the business has to give or will go out of the business. So the equation, accounting equation says assets equals to liabilities plus equity. Let's quickly confirm it. Started business with 10,000. So when I start business with 10,000, let's say cash 10,000. I received cash, so business will receive 10,000 cash and this cash will be represented by equity of 10,000. This belongs to me, so equity. Assets and liabilities, is it equal? Yes, it is. Next, purchase furniture for cash rupees 5,000. So when I purchase furniture of 5,000, out of this 10,000, so this cash becomes 5,000 and remaining 5,000 I purchase the furniture. Now the total is 10,000. Yes, and this side is not getting affected, so the total is 10,000. Is the equation tallying? Yes. Owns and owes is equal. Third, purchase machinery on credit for rupees 8,000. So I purchased some machinery for my business for 8,000 rupees, and in turn I haven't paid anything. I'm yet to pay. So they become my creditor or the loan that I have taken. So the creditor is represented at 8,000. Now the total here is 18,000, and the total of the liabilities or the things that I own is 18,000. Is the accounting equation tallying now? Yes, it is. So when you pass the journal entries following the double accounting system, your accounting equation will always tally. Assets should be always equal to liabilities plus equity. Things that a business owns should be equal to the things that the business owes. That's all about accounting equation. I hope you understood the topic. Thank you for watching and happy learning.